Welcome to Trends with Benefits, an award-winning podcast by Van Eck with a forward-looking perspective. We explore new ways of thinking about the markets, work, and life. Here's your host, Ed Lopez.
So one thing I didn't realize, and I'm kind of embarrassed to admit this, is that in 2019, Millennials surpassed Boomers as the largest generation in the U.S. I'd really been focused on Boomers or the implication of the Boomer retirement wave, what that meant for investing and consumer trends. But I think it is important to consider now that Millennials are moving into their wealth generation years, what it means for consumer trends, for business strategy, and even investments as well. And to help me kind of walk through that, I've invited Stacey McKinnon, COO, CMO, and a wealth advisor at Morton Wealth in Calabasas. Hi, Stacey.
It's great to be here with you. I'm excited to talk about this topic. I'm very passionate about it.
Yeah. You were recently highlighted in Financial Advisor talking about the next gen boom. Mm-hmm. We caught up before year end, and I think that you are a very articulate and informative person to listen to. You have ideas on a lot of different topics. Hopefully, we'll get into some of those things as well, but. And we'll definitely talk about this next gen boom as well, because I think there are some important facets to it for people that are in the business of providing financial advice and planning, as well as potential for individual investors, other millennials perhaps, to consider how they pick their financial advisors, different types of investments they should consider, things of that sort.
Yeah, I'd love to dig into that topic deeper. I'm not only passionate about it because I think that millennials are one of the most underserved generations by financial advisors, but I also just feel that the topic of financial education is not spoken of that often. If I wouldn't have ended up in this industry, I don't know if I would have been able to make the decisions that I can make today, having the knowledge I have. And most of my friends, colleagues, people I know in life, they just weren't taught this. And so not only are financial advisors not quite serving millennials, but our education system's not really serving millennials as well. And so I think we gotta come up with some solutions for this.
I will say that I've been heartened by the fact that I feel like there's been more discussion about financial education in recent years. So I think it's good that that's coming to the fore. And maybe that's because of your generation. And I feel like I've had more and more of those discussions lately than at any time since I joined the financial services industry.
It is a much heavier topic being spoken about. And I'm starting to see big groups like even Schwab launch programs in schools and seeing it like flow into high schools a little bit more than it has in the past. And that makes me happy. I mean, think about all of the decisions you make in life and how finance is generally a part of it. It's some type of a component. And so for us to not be taught about this and then go out into the world and make all these decisions and set all these goals and not have the framework of, how our financial situation impacts those goals, that's not really setting anybody up for success. So I am stoked on the fact that it's trending in this way. So that's probably a very good trend that's happening that we can all be, optimistic about.
How would you rate the financial services industry in that trend currently?
Oh man, I think we got some room to grow. The main challenge is, like, if you think about the history of financial services and how we've evolved, you went from brokers to the emergence of RIAs really in like the 1990s. It started to become more popular to today. You certainly have more people providing fee-based financial advice. But the challenge that most RIAs face is that it's also very expensive to hire advisors, to keep talent, and to run advisory firms. And so that means that you have to level up the clientele that you're working with, and you have to work with people who have the net worth that can pay you the fees to be able to support the services that you offer. We have to find a more efficient way to operate and run and to be able to give back to the world around us and to provide that financial education and advice that people need. And I don't think robo is going to cut it. And so there's got to be some other ways where people can receive personalized advice for them in their life, and it's not going to hinder a company from being able to survive. And so there's a little bit of a conundrum, I think, still happening in the industry. And until we solve that conundrum, I'm not going to give us like a B or an A or a B in our ability to make financial education available to everyone, because you're just in an inherent conflict. And I think that might take a little bit more time to solve for.
let's just kind of set it up again. Let's talk a little bit about millennials becoming the largest generation in the US today. And from the perspective of investors, other millennials or investors in general, even, because maybe there are certain trends that affect other investors as well. What do you think it means for investment markets?
I'm not so certain that the millennial generation is affecting investment markets. I think there's quite a bit beyond all of our control that's affecting investment markets. But investor behavior of millennials, I think, will be really interesting in the future. Millennial generation is kind of split into two. One half they call the elder millennials. The elder millennial generation is basically the generation that graduated from college, say from 2006 to 2009. Just the worst time to graduate college, enter a job market in the middle of a recession and a crash like what we saw. And so that grouping of millennials tends to be a little bit more conservative, a little bit more worried, a little less trusting, just wondering, okay, what are the right decisions? Maybe I'll hold a little bit more cash. I'm not sure if I want to be opportunistic. What if we have another recession? And they're kind of traumatized by the world event that they went through at a very pivotal time in their life. Then you have the other half of millennials that are optimistic, excited, opportunistic. They tend to get advice from their friends. They might be on like a text chain with a group of friends and they just like share tips. And that's where they get their financial advice from and where they learn and how they're investing. And that tends to not always look like the stock market and what we've historically seen from prior generations because there's a lot more options out there. So look at what's happened in crypto over the last few years, and especially in 2021. And even though we've seen a significant pullback last year and a lot of issues in the space, I still think there's some optimism around like, what does this mean for the future? And this is probably something that should be thought of as a long-term investment, not just a short-term year over year. You also see a lot of the younger generation going towards real estate. There's a huge push for ADUs. Listeners aren't familiar, when you buy a piece of real estate and then it's zoned so that you can build on another piece of small real estate onto the property and then have it be income producing, essentially mother-in-law unit, right? So there's a huge push towards those opportunities. And especially in California, there's some legislation that makes that easier to do now than it has been in the past. So I'm seeing some trends towards and millennials investing in more assets they can see and touch and feel, and or things that they think are the future of investing, but maybe not building a portfolio. And so this is a conundrum, I feel, for financial advisors that you may not see as much of the millennial generation trying to have a $5 million portfolio with you. You may see them navigating a lot of different things in their life that they're passionate about. It might just not be saving for retirement in the same way that past generations have.
Does it change the approach to portfolio allocation and the types of questions you ask them, the way you, I don't know, optimize a portfolio? Do you still even optimize a portfolio in the traditional sense, or do you create different buckets for different goals and things of that sort?
Yeah, so I think this is a diversification question, right? And a goal-based question. Like, as an example, I was with a group of other financial advisors in December at a conference, and I just threw out the question to the group of financial advisors. I said, does being an advisor make you save more or spend more? Do you have any idea? Like, what do you think their answer was? Do you think that financial advisors, being an advisor, do they spend more or do they save more?
I feel like they would save more.
You would think that across the board, the answer is they spend more.
Huh.
And the reason they spend more is because they work with so many clients who have worked so hard for their entire life, saved every penny, got to age 65, and then had a health event happen or had an injury. Or, very common, is just emotionally couldn't spend the money. Like, they trained themselves over 40 years to save every penny and to not spend. So in their mind, spending equals bad, saving equals good. And so they retire and they still don't spend their money. And then they don't know who to leave it to or how to enjoy it. And so, very interesting in this conversation, the financial advisors that I was speaking with, which are generally the grouping I was with was 30 to 50-year-old financial advisors, said, I don't want to be in that situation where I don't enjoy my life. Even financial advisors are focused on like, what does it mean for me to enjoy life today, but then save for the future me, the one that wants to do the things later on. And so there's a few things that I think we need to adjust in the language we use as financial advisors and how we approach these groups. One of them, as an example, is I feel that we should be building spending plans for these clients, not budgets. Budgets makes you feel locked in, like the walls are kind of closing in around you. A spending plan implies that your hard-earned wealth, the things that you've really invested into to have the wealth that you have, they're going to be spent on either the current you or the future you. The current you might want to travel to Europe next year. The future you says, hey, I got to figure out a way to pay for my kids' college. So I'm going to put some money aside for that. And I think just even some of the language we're using with the next generation's got to change. I think we have to build spending plans, not budgets. That's a simple example.
That's interesting. That's I hadn't heard that one specifically. I have been hearing more about this idea of working with clients to live life now and plan around enjoying experiences in life while they can. As one of the I'm not a millennial, but in a little more older set, I guess now. I can't believe I just said that. In starting out my career in financial planning, actually, I'm fascinated by that idea, but also scared to hell by it. I was like, all right, I don't want to spend too much, but I totally get it. You want to go out and enjoy life, have experiences, and I don't know. I've only gotten comfortable with that after I've been able to build up a cushion.
Yeah, you obviously have to get to a place where you can do those things, right? Like there's a lot of work that it takes to finally sit down and say, what do I want to do now? Do I want to spend my money today? Do I want to save it for the future? How do I navigate those decisions, and what's the right decision for me? And I think a lot of younger generations are asking those questions. And then, the other part about it is that it's complicated. Like spending money today might be buying a second property that they can go and use. Maybe they're in the city and they want to go to the mountains, and that's really important to them. So they're going to put the money into the property instead of putting their money into a portfolio. That's not a bad decision, but that's not how financial advisors have typically advised clients, right? Generally speaking, unless you have $1 million plus of assets to manage, the financial advisory industry can't serve you or serve you well. And so this is a different landscape for financial advisors, and I think it's going to continue. I don't know that you'll see the dump as much money into my portfolio as possible mentality that I think did happen in the past and for many years, and that's how a lot of RIAs got successful. So we're going to have to switch from assets under management to assets under advisement and change the way that we as advisors think about helping these clients and our fee models, honestly, to be around everything happening in their net worth, not just what we are managing.
Yeah, true. And that's another area, this idea, perhaps a subscription-based model for certain clients. How do you guys approach it? Do you have different business models kind of depending on the client, or do you work one way?
Yeah, so right now we have our typical model, which is a $15,000 minimum, essentially clients between $1 million and $1.5 million. That fee schedule is justifiable, and then it's 1% and assets up to $5 million and 50 basis points after that. We also have a model that for business owners, which is a retainer model. So if somebody's going to be selling their business in the near future, we have an entire service offering around working with those business owners to make sure that they're making the best decisions in their business today to optimize it and essentially maximize their sales. So that's another model that we have. And then in the next few months, we're launching a new model. It's called Modern by Morton, but spelled MODEARN. It's for earners, people in their earning years. And this model is going to be more similar to like a concierge doctor model, where it will be a subscription-based model. We proactively work with millennials to tackle financial planning items one at a time. So in the first month of working with us, we might just put together your spending strategy for you. In the second month working with us, we might tackle your insurance needs, do a quick review of all of your insurance, and then maybe make some recommendations. In the next month, we may look at your credit and debt and better understand, do you have debt? How do you pay that off? What's the process of that? What do your student loans look like? Then we may also, on the other end, try to optimize how you utilize credit. How do you maximize your credit score? What credit cards should you use? How do you get benefits back? So the new model that we're launching in a few months is going to be subscription-based. We do have proactive touches where we're tackling different areas of people's financial life, but the main goal here is that we want to be there for the client when they need us. Younger clients are busy. They're growing their families. They're growing their wealth. They don't have a lot of time. They're not interested in sitting down twice a year for an hour portfolio review. When they need financial advice, they want to be able to access it. So we're even partnering with a group that has a new app coming out called Financial, spelled with a Y, FY. And their app is amazing. It pushes through documents. There's a chat feature where you can communicate back and forth. And so our idea here with the new offering that we'll be launching in a few months is we want to make it accessible, personal, but we're not going to overdo it. We're not going to make financial planning super complicated and do projections for 40 years out. We're going to try to give people the advice they need now.
Do you think that's going to allow your advisors to be able to manage more clients?
In some ways, yes, because there's some complications that come along with any client management. Fidelity did a recent study, and for mid-size RIAs, so call it people that manage between $1 billion and $5 billion, the average cost to service a client is between $9,000 to $10,000 a year. So when you're looking at that as an example, that sounds kind of expensive for someone who's still growing their wealth. But the reality is if you can help them make good decisions around optimizing their benefits at work, give them the protection they need. So if they get in an accident, it's no big deal. Understand their estate plan, maybe even help them with comp negotiations, figure out their stock options and, what the right process should be if they have concentrated stock and need to liquidate it over time to achieve their other goals. All of that stuff will be worth some subscription fee, which our hope is that we can price ours closer to $6,000 a year so that we can give people that advice they need and then do a separate model for managing assets, but have, no minimum on that. So my goal here is that even if clients don't have a lot of assets, we can still provide them the financial advice they need through the subscription model and then, help them to build their wealth over time.
Outside of, I guess, some of the unique aspects that you've highlighted in terms of how millennials, for instance, want to be contacted and how you want to reach out to them, what are some other aspects of the financial planning business that need to evolve in order to meet this group?
Yeah, so let's just talk about communication in general. So even for me personally, if you want to get a hold of me, you should text me. That's I fit in that, elder millennial category. So I certainly am not as optimistic, but I still am practical. And I'm sometimes I'm in meetings, I'm running between things. I can't pick up the phone. I don't have time for a call. Shoot me a quick text. I would rather do that than have an hour-long meeting. I just don't think that that's what this generation is looking for. The trek to get into the office, to do the whole thing. And that should save advisors time too, if they're thinking about how do I make this model scalable. Not having an hour-long meeting is a very good way to do it. But the other thing that happens with the meeting is that you prep for the meeting, you have a post-meeting, there's tons of work that goes into the whole thing. Instead, I think the model is going to have to be tackle one thing at a time. What's the current problem of the day? What do you want to solve for? What are the questions that they have? Is it which credit card do I get for my business? Let's just tackle that one. And then we'll tackle the next one later. And so in the past, I think financial planning has been arduous. It feels like somebody sends you a budget worksheet and a document upload list, and I just don't want to log in to every single login and download the thing. And I'm sure it takes an hour, but it just feels like a lot.
The way you talk about millennials and the way they like to operate, you might think that I'm a millennial because I love just text messages and short
right?
meetings. So I don't know if I'm either a progressive Gen Xer or immature. So okay.
Well, I think that Gen X likes that too. And, actually, I think there's a good amount of the boomer generation that, they're saying the same thing. They're I don't want to do the long, drawn out thing. Can you just, tell me, am I good? Am I not good? What's exciting? What are you doing to be proactive? What's going on in the world today? How should I protect myself? Is there any dislocations that we should be going into that are going to really boom going forward? And, that's the interesting thing about recessions or potential recessions is that opportunity tends to come from those. And so I think a lot of these clients, they hired you not because they want to know how the watch is made, because they want to know what time it is, so you got to just tell them what time it is.
I think you have a very unique background. You didn't come the traditional route, if there is such a thing, into financial services.
No, I didn't. So I was teaching Pilates classes, running a Pilates studio and doing wedding planning. And one of my clients at the Pilates studio was our chief investment officer, Megan Pinchuk. And she had taken over a significant part of ownership in Morton in 2013. And so in 2014, she came to my class one day, and after class, she said, "Hey, I just took over as a significant owner of this company. Will you come join me?" And I said, "That does not sound like Pilates. That sounds like.
Do you want me to give classes there?
Yeah, what is happening here? But I had a degree in business economics and in religious studies, and I, knew a little bit about it, but I didn't really know what was going to happen in this industry. And so she was, persuasive and eventually got me in. And at that time we had 18 employees in 2013. Today we have about 53. We've grown significantly since we started then. 3 months in, I said, hey, I even thought to myself, what could I do to add value? I have to learn so much to be a contributor to this industry. Maybe I can use my background in wedding coordination, and I had done a little bit in marketing in the past, to just build them a new website. So one of the first things I did is I built a new website, got my CFP, focused on client relationships, learning how to speak to clients, talk about the world of investing and financial planning. And then in 2017, about 2.5 years later, I was, ready to kind of take that next step into more independently working with clients. And they came to me and said, hey, would you rather be the COO or would you rather be a wealth advisor? And that was a hard decision that I had to make because, there's so many benefits to both. And I got advice from a really amazing industry consultant. And she said, do you want to directly impact 100 clients or do you want to indirectly impact thousands? And that was essentially what helped me to make the decision to step into the COO role. I still maintain about, 25 client relationships or so. And, I can maintain probably another handful. But my role as a COO is running the organization. But I just love working with clients so much still. I love making a positive impact on their life. I love it when they go from that moment of I don't know what's going on, to just complete confidence that they've got it all under control and that they have us as a partner to have it under control for them. And so it's really important to me to continue working with clients. And then it's also important because as I'm making big decisions on how we operate as an organization, I know how it impacts the clients because I work directly with them. And so that's been really instrumental. So that journey took me to a year and a half ago, where I was already doing a lot of the marketing work, but we didn't officially have a chief marketing officer. So I added that title as well. So I spend probably about 50% of my time in my COO role and about 25% of my time in my client-facing role and 25% of my time in marketing.
That's great. I mean, for somebody that likes to do perhaps different things and has skill sets of different things, it sounds like you've had a great career there at Morton.
It's been amazing. And it's also just such an empowering place. Jeff Sardi, our CEO, I'm pretty sure his dream, if you ask him about his dreams, he wants to make sure every client sleeps better at night. And he wants to make sure every team member loves coming to work every day. He just is so passionate about that. And I feel like working for somewhere where the person you're working for includes that in their vision statement is powerful, and it's not always common. And so the culture here is a culture where we work hard and we make each other better and we push each other, and not perfect, just like most cultures, but at the end of the day, the intent of the leadership is that we want people to be happy and we want people to enjoy coming to work. And that, I think that's the dream.
For people that are perhaps early in their careers in financial services, or maybe thinking, even consider coming into financial services, what characteristics do you think will serve them best? And perhaps maybe what do you think has helped you the most?
I've written a lot about this and probably stated this on other podcasts I've been on, but I just think competence, confidence, and communication, those three things. I know I just used 3 C's. I'm sorry about that. But confidence, competence, and communication skills are just vital. You can know everything about financial advice, but if you can't communicate it well, truly will not matter. You truly cannot make an impact on people's life if they don't feel heard. You don't ask curious questions. You're not confident in the way that you speak. You don't use your vocals well. You hide or get nervous. You tend to download on clients instead of having a dialogue with them and asking questions and going back and forth. Communication skills are just everything. And so one of the first things that I would share with a newer team member is that you should get uncomfortable with feedback. You should find the people in the organization that will give you the best feedback possible and just take it in. I know it feels so uncomfortable to, be criticized or to go through that. But I mean, at the end of the day, we can all only get better if people can help us to get better. And so find those people within your organization or without where you can practice, where you can role play, where you can be uncomfortable. So honestly, you're practicing on your peers before you practice on your clients. And that to me is vital in career success.
I wonder if you can elaborate on competence a little bit and developing competence. And let me set this up, and it's probably going to sound like I'm bashing millennials. But
Okay, yeah, go for it.
I'm not
Go
trying
for
to.
it.
You know, there's this old, I don't know, adage, or it's not really an adage, but this idea that, I don't know, millennials were given, blue ribbons for everything. And so they come into the workplace and they're in the workplace for like a week and like, all right, I was here a week. When do I get promoted? And I'm exaggerating that a little bit, but it's like, all right, you haven't quite learned everything yet. And, how do you help them get there or understand, or, is it, I spun my wheels a lot early in my career, staying late at night. I was brought up in the, during the period where you work till you drop, but that's not quite the way it is today. I don't know. Do you have any thoughts about how to really, truly get that competence and demonstrate it?
Yeah, so there's a difference between knowing and doing and achieving results. And I feel that the best way you can coach a millennial team member, and by the way, I'm an elder millennial, so I'm not going to take offense to this conversation. But the best way you can coach a younger team member that's struggling with that gap between like what they actually can do and what they think they can do, which sometimes is a gap that happens, is to give them the opportunity to speak out loud. So one of the things I'm fascinated by is even when you're doing public speaking or any other activity, what you write is not the same thing as what you say. And so you could take as many tests as you want, you could have as much knowledge as you want, but if you and I have a conversation and you come to me and you say, Stacey, I'm struggling with which avenue to go with my college planning. Can you talk me through all my options and help me get to the best conclusion? And then theoretically, I know all those things, but can I say it out loud to you? If you're in a management or leadership role and you're struggling with this and that gap is big, have them role play, have them say it, verbalize it. Because as soon as they verbalize it and realize they can't actually verbalize it and that they got a lot of work to do, you'll slowly see that gap decrease and you'll see them try harder to actually get to that place. And I truly think that is where some of the biggest issues come from is the gap between what's in your head and what you can actually do or say or the results you can achieve.
For investors that are looking for help and advice, do you have kind of a brief checklist of things that they should ask potential advisors, things they should consider?
Yeah, so we've touched on a few of these, but one thing to ask your advisor, how many clients do they work with? At the end of the day, you want someone who's going to give you a human, personalized approach. They're not going to just throw whatever they think is great at you. They're going to treat you as the hero of your own story. And so asking the question of, do you have the capacity to work with me? And what does that look like? I think that's a really good question to ask clients. The second thing I would say is also ask, for clients to ask advisors. The second thing I'd say is that clients need to make sure that they're thinking about advisory teams, not just the advisor that they see. So if you work with me, I also have an 8-person research and investment and portfolio management team that works behind the scenes that doesn't work with clients. Their whole job is researching new investments, doing due diligence, working with partners to make sure that we're all aligned to do portfolio allocation, to do portfolio design. Last year, we reviewed 200 investments and we only approved 6. Like, we are doing due diligence behind the scenes so much. So I'm able to put my best into clients because I have a team that's working behind the scenes to do these things. And we're doing more complicated stuff. We, of course, have like more traditional investments, stocks, bonds, and commodities, but our bread and butter is really doing private alternative investments. So that looks like real estate equity, purchases of real estate and working with funds that do that. And then also doing more private loans, maybe loans that are backed by real estate or loans that are backed by like assets of a company. But we've been doing a lot in that space, which in 2022 served us very well because our portfolios performed well. Given the headwinds in the market, we're really proud of that. But it's also like a good way for us to be opportunistic in the future. I mentioned earlier that in a recession, there's generally dislocations, and in dislocations arises opportunity. I want my team focused on that. I want them to find that. And then I want to focus on the client and the person sitting in front of me and how do I invest into them. And so ask your advisor, like, what's their team? Because you want to know that. You want to make sure that they're allocating resources in the right ways. I think that those are probably two of my top responses. I would also just make sure that financial planning is some part of the conversation, especially if you do any illiquid investing. So if you are going to do alternative investments, you want to partner with somebody who will take your cash flow into account so that they're allocating the right amount to these investments that are interesting, opportunistic, and in many ways, I think, in some ways have less risk than other things in the market. But you have to make commitments to put your money in these investments for X period of time. That's totally appropriate as long as you have an emergency fund and the cash flow you need for your regular life, and there is some liquidity in your portfolio just in case you need it. So ensure that whatever financial advisor you work with, there's a combination of financial planning and portfolio management so that you're not, pulling on one string and a bucket falls over here.
As we start to close out and you look forward for the rest of this year and perhaps like 5 years down the line, are there any long-term trends that you see playing out?
Yeah, so I'm very curious. I mentioned a few things earlier, but one that I'm super curious on is whether or not we will see people build up portfolios in the future generations, or we'll see a lot of diversification and a lot of personal investing. One other just aspect of like millennial versus prior generations is that the millennials have the internet. So like their investment options are much greater than when, 30 years ago you had to call someone. And I think that's something that I truly think might be a trend that we see going forward, is just this idea that the investment universe is so much bigger than the public investments that people can do with financial advisors. And then the second thing that I'm curious about is just how the workplace continues to transform. The future generations are a lot less interested in just like working for a paycheck. They generally want to work for impact, which is one of the other reasons I'm also passionate about creating next gen offerings, because I feel like to have talent of the future, they have to help their people. Like, I'm not sure that I can hire a bunch of people that are 25 to 40 years old and tell them to work with somebody who's like retired and wealthy. Meanwhile, their friends and family and the people they care most about can't get access to financial advice. So as we see workplaces kind of become more impact oriented and in some ways more employee focused, I also think there'll have to be some trends in financial services where we're ensuring that the services we provide align with the impact that our team members want to create. And I think talent development is certainly a topic of conversation across the industry. Charles Schwab at their annual conference said it was the number one concern for financial advisors was talent acquisition and development. So that will be interesting in the upcoming years. And especially given the inflationary environment we face, I'm very curious to see how the dynamic between rising costs of living and more demand from employees to figure out how to increase their earning potential, pair that with, potential like earnings getting hit, a recession, and companies not doing as well. I'm not sure what 2023 is going to look like for that. That's going to be, I'm not looking forward to that. It's coming, and I just don't want to. I don't know.
Yeah.
It's going to be hard decisions that are going to have to be made.
You ready to play Trend or Fad?
Sure.
All right. So I'm going to mention 3 to 5 different topics. You can answer simply trend or fad, or feel free to explain if you'd like, but you don't have to. You referenced one of these, crypto, trend or fad?
Trend, but not all of it. I think I probably have a little bit more belief in Bitcoin than I do in some of the other ones, but I do think that there's still a trend. TikTok,
I can't even say it, finfluencers, TikTok financial influencers, trend or fad?
I'm going trend on this. I find myself, and I don't have TikTok, but I do have Instagram. I find myself on Instagram Reels watching some of the like travel hacks and some things that you can do to save money or to be more opportunistic. I think that quick digestible information, I mentioned it earlier, we're doing a lot, we're multitasking, we got a lot going on. Quick, pointed content, I think is going to be the future.
ESG, trend or fad?
Oh, I'm still going trend on this. I think there's some problems with the way that ESG is being outlaid. It doesn't feel as intentional to me as I think people want it to feel. It still feels like you're taking a bucket of investments and you're just doing less of certain investments versus truly saying, what do we need as a society and how do we make that impact? The impact focused RIAs, they are finding those like very specific investments that I think would be very attractive to people who are looking to invest in ESG. But the overarching funds, I'm not sure if that's like quite doing it. But I think there's a lot more progress to be made here, and we'll see it happen in the future.
Electric vehicles, trend or fad?
In Europe or America?
Well, let's start with America, kind of given some of the recent regulation or laws that were passed.
We're probably looking at trend. I don't think they're going away.
And then finally, hybrid work, trend or fad?
I think fad, but I will caveat that with my opinion is that the best firms are either doing remote first or office first. I think hybrid, the combination of both, is where the challenges come into play. And mostly it's coming into play for the organizations who do what I call the choose your own adventure model, which is like, come to the office or don't come to the office, whatever you want to do, 2 to 3 days a week, it's fine, whatever. The challenge there is not whether or not those people can do it, it's how it impacts your other team members. And I think that is going to butt heads over the next year. I think you'll see a lot of organizations going to models where they say 3 days a week. So Tuesday, Wednesday, Thursday, come to the office, but Monday and Friday, you can work from home, and they level the playing field. So everybody is in the same place at all of the different times versus this choose your own adventure model. The choose your own adventure, I think, will be a fad. The shortened days in the office, though, I think is a trend. I do think firms will go to 3 or 4 days in the office, where 4 days, Monday through Thursday, and then people can work wherever they want on Fridays. And we've done that for 6 months before we were choose your own adventure. And the new model is just night and day better than the old model. And it's just because we're all here in the game. And then we all kind of are doing this, we're working on Fridays, but we're all on our own. And so you're not just like looking around the office, like, where is that person? Are they here? Are they not? Can I Zoom them? Are they walking their dog? I don't know. So that's probably a long-winded answer to that question.
This is awesome. Thank you very much for your time today. What's the best way for people to learn more about you, follow you, learn more about your business?
Yeah, LinkedIn is best. So if you just follow me on LinkedIn and put in Stacey McKinnon, you can find me there. Or you can go to moreandwealth.com if you want to see the website that we talked about today. But yeah, I try to post content as much as I can. I'm always looking at where the world is going, lots of leadership topics, next-gen topics. So LinkedIn's a good place.
Fantastic. Thank you very much, Stacey.
Thank you. It was a great conversation.
And thank you for tuning in to another episode of Trends with Benefits.